Good morning, traders. Richard here doing a quick Ichimoku cloud chart market review of the Nasdaq 100 index. We're looking at it from a QQQ ETF perspective here. In the last update, we were fighting this top-end cloud chart resistance, looking for a breakout past this top-end cloud chart resistance zone. The breakout came as a significant resistance zone that was broken, and then the upside targets were activated. This old resistance zone, this cluster between old highs and the top end of the cloud. You have August and September resistance zone on the daily Ichimoku. Now, we've reached our upside target. This is a nice, about a 10% rally from this cloud chart support levels. It comes from this old cloud chart support zone here between July and August, very close to that support zone. At this point, we managed to rally, break past the standard line and the turning line of the cloud, bottom end cloud chart resistance, top end cloud chart resistance, and now we're back up here at significant old highs and old cloud chart resistance levels. Now, the targets after that would be these highs there and the ultimate top high there. That one there. So these are the upside targets from now, since we're back above the top end of the cloud. And since we're back above the top end of the cloud, we're back in bullish territory on the daily. Price action above the cloud is bullish, price action below is bearish. So now the daily cloud is back into bullish territory. Now we need to see somewhat of a consolidation of this move. And a 38% Fibonacci retracement would roughly bring us to this top end cloud chart support zone. So key downside consolidation levels to watch out for. First, it would be this zone there at 371 for a potential test to see if that resistance zone is now a new support zone. If that fails, then the other level to watch out for is this cluster of 368, between 368 and that 367 is the other support zone to watch out for. So a consolidation of this move, we could see a bit of a week-long consolidation back down to these levels, and then a rally from there. In a very weak market, we could test this top-end cloud chart for a roughly 30-50% retracement on this move. Or this one, yeah, on a significant downside. But so far so good. Strong rallies, fighting resistance, old resistance zones now, with downside consolidation to 371 and 368 for a consolidation of this particular move. Turning to the 4-hour Ichimoku. On the 4-hour, we could see these highs here of August and September. There are significant resistance zones, and the top end of the cloud here is another key resistance zone to keep in mind. So we're not far from that upside resistance target there. We need to see a bit of a consolidation of this move back down to the front end cloud support level there, and you can see where that support zone is. There's another support zone there. So these are the downside support targets on the 4-hour, 368 and 367, roughly in view of a potential consolidation of this particular move back down to the front end of the cloud, as well as this support zone there, these levels there and that level there. So you can see there's potential for the market to consolidate back down to retest these resistance levels for support on the 4-hour Ichimoku. Back to the weekly. You can see price action is rebounded from a cluster of support here. You can see where these support levels come out from the daily and the weekly and 4-hour. We're back into upside resistance zone here, and you can see a significant cloud chart resistance zone at the top end of the cloud here. This old high there of what, 387 is a upside resistance target. So that's a significant resistance zone on the weekly Ichimoku cloud. But catalyst to watch out for on the daily is, the good news is we're back above the top end of the cloud, and there's now just all resistance levels there, which is the upside resistance targets to watch out for. Downside risk is back down to the front end of the cloud, and then continue a year-end rally from these levels to retest these old highs from an Ichimoku cloud chart perspective. Now, the good news is we did break past this trend line resistance zone. So that's good news, and that trend line can now act as support, and you can see where this trend line coincides with the top end of the cloud. So these are potential support targets or support zones to set up for a continuation of the year-end rally to retest these old highs for resistance. But so far so good. Back above the cloud, outlook is bullish, with the downside risk towards the top end of the cloud for potential rebound, and then a continuation into the year-end rally. just on a different point, if we overlay the Fulgent AI engine that sits on the Metastock platform using artificial intelligence, together with cloud charts, we can see we had a beautiful volatility breakout signal here and captured that entire move using artificial intelligence. So it's really incorporating AI and the Ichimoku clouds are really a great way to look at the markets. But yeah, back to the daily. Critical thing to watch out for is the breakout from this resistance zone or a pullback consolidation back down to the front end of the cloud. So that's kind of the catalyst we're looking for. If this resistance level holds here, we're going to dip back and retest the front end of the Ichimoku cloud. Until next time, happy cloud chart trading. Bye for now.